Joining us now is Brad Erickson, RBC Capital Markets Internet Services Senior Analyst. I saw your notes, Brad, and you were picking up something in the last 2 weeks of March. Did you think there was going to be a worse report than we saw? It was better than what some of your metrics were indicating to you.
Yeah, I think we saw some definitely back and forth data points. What we found kind of 3.5, 4 weeks ago was that for the digital response ad industry, which is essentially, primarily Google search and Meta, we found that results were actually in line to a little better. And then April had actually started out even more above expectations. We felt like Google was doing a little bit better than Meta, but, kind of splitting hairs. I think in the last few weeks, yeah, we picked up some things suggesting Meta had made some changes, had sort of messed with people's return on ad spend a little bit late in the quarter, and didn't really know what to make of that. We didn't find much behavior change associated with that, meaning not many people were changing spending, but it just didn't feel great to us. I think coming out of last night's report, safe to say it didn't matter.
The stock started rebounding after Mark Zuckerberg, I guess, said this is going to be a year of sort of efficiency. And we've seen what's happened. I mean, fairly significant layoffs and I guess trying to, cut costs. But would you characterize the move into the metaverse? That's still going almost 100% of what he was. That's okay. They're going to cut costs other places, cut employees, but still spend a lot of money on what may or may not pay off. You think it's going to pay off eventually? You a bull?
Yeah, I mean, we're bullish on the core business. Meta was our top pick coming into the year, and I think we're definitely still in that camp, particularly coming out of last night.
Is that the metaverse business or the core business?
No, that's the core business.
Are you bullish on the metaverse business? It's called Meta
Not
now.
to dodge the question. Let's put it this way. I think when your core business is firing on all cylinders, and I think they're continuing to show that that's happening, you can work on some science projects that may take 5 or even 10 plus years to show a return on investment. I don't think we have concrete enough evidence that there's the mass adoption potential to run an advertising model anywhere close to what Meta does on its core business at this point. So yeah, we haven't touted the metaverse as any part of our bull thesis. That's definitely a free call option in the stock at this point.
A free call? It's not free though, is it?
Well, if you figure the core business is trading below a market multiple, you could actually make the argument that it's less than free.
We've had a lot of conversations. Whenever we talk about tech, we get back to ad spending somehow, and that gives us some insight into the not the virtual world, but the real world. How would you characterize the overall economy in terms of the ad spending you're seeing for Meta?
Yeah. So here's what I think is sort of going on that's definitely proving better than anticipated. Google 2 nights ago beat expectations on its search revenue. Obviously, Meta beat last night and guided Q2 ahead of expectations. What I think happened last year that I think got missed was a lot of small and medium-sized businesses, which, by the way, those are the majority of these companies. Remember, the long tail of advertisers are actually bigger than large enterprise advertisers on these models. Those guys all changed spending mid last year. The war started February 24th. Inflation happened, energy costs, wage inflation, higher operating costs of running businesses. And so immediately in April, May, June of last year, they had to find budget in their P&L. Where do you do that? You pull from ad spend. And so there were already significant headwinds. I think what we're finding right now is as the consumer continues to be, call it, more resilient than a lot of people would think month after month, quarter after quarter, that ad spend is kind of slowly trickling back, better than feared. And so, yeah, I think that's still what we're seeing. We can debate what the future holds, what the second half looks like. Will the consumer hold up? At this point, it is, generally speaking.